Hey guys, I'm Kalilah Reynolds, and it's time for another episode of Money Mondays JA, brought to you in partnership with Proven Wealth. Well, the Jamaica Stock Exchange has crashed. It's lost an estimated $500 billion in wealth since February. That's nearly 4 billion US dollars. But don't panic just yet. I'm here to explain some of what's going on. Now, first, let me fill you in on some of the terms that you may be hearing a lot right now, because I find that many times we panic out of ignorance. We hear something and we don't quite know what it means, but it sounds scary, so we panic. The first term is the one I just used. The stock market has crashed. Sounds very scary, right? It conjures up images of something falling, hitting rock bottom, hitting the floor. It sounds like there's no recovery. I mean, people die in motor vehicle crashes. So you hear stock market crash and you think, oh my God, it's the end. But that's not what it actually means. A stock market crash is an abrupt double-digit drop in stock prices. The JSE has declined 25% since February. That's an abrupt double-digit drop, so technically it's called a crash. But there have been many stock market crashes in history, and it was never the end. Things have always recovered eventually, sometimes faster than others. And the truth is, these are the times when many millionaires are made. Like Warren Buffett famously said, be greedy when others are fearful, and be fearful when others are greedy. But before I get into some of the strategies to help you weather the storm, let me give you some more of these scary terms and what they actually mean. Another one you may be hearing a lot right now is bear market. All this talk about, oh, we're in a bear market, BEAR, the animal, the opposite of bull market. So a bear market is defined as a time when stock prices fall 20% or more from recent highs. So we're definitely there, having fallen, like I said, 25% from some of the highest highs in our history. Here's a little fun fact, by the way. It gets its name from the way a bear swipes downwards to attack its prey. On the contrary, the bull market, when stock prices are moving up aggressively, gets its name from the way a bull thrusts its horns up into the air to attack its prey. Now, here's another scary term for you: recession. Ooh, sounds like another end of the world apocalyptic term. But a recession simply means at least two consecutive quarters of negative growth. So 6 months in total. If we have one quarter, 3 months of negative growth, that's not a recession. It has to be 6 months or more. Here in Jamaica, we've had 20 quarters of positive growth to date, although the last quarter was mostly flat, just 0.1%, and it's likely to dip into negative territory for the quarter that we're currently in due to all that's going on right now. Businesses shutting down and many people losing their jobs as we try to prevent the spread of this disease. Will that translate into a second quarter of negative growth, which would make it a recession? I hope not. None of us can really predict the future and say how long all of this will really last. And once the virus passes, how long it will actually take us to recover. That's what makes things now so scary, all this uncertainty. Now, here's another term: depression. And this is more than you just feeling sad about your finances. You've heard about the Great Depression in the 1920s, right after World War I. It wasn't called that because a lot of people were sad after the war, although I'm sure that many were. An economic depression is a severe and prolonged downturn in economic activity. It's an extreme recession that lasts for 3 or more years or leads to a decline in economic growth of at least 10%. Now, I definitely don't think that we're heading there. Now that we're all on the same page, let's talk about some of the reasons the market is crashing and what you can do during this time. Remember though, I'm not a licensed financial advisor, so don't take anything I'm about to say as advice. One of the big reasons we're seeing this bear market is panic selling. A lot of people are seeing their stock prices falling and they go, oh my God, I don't want to lose all my money. Better I cash out now and lose some rather than lose it all. And then there are people who genuinely need cash right now. Thousands of people in tourism, especially, have just lost their jobs, and more layoffs are going to be coming in waves as various industries get hit. Entertainment is another big one. Anything in hospitality, restaurant workers, for example. I really feel it for these people because there are lots of people for whom investing on the stock market was their backup plan. If things ever went sour and they lost their job, they figured they could always just cash out their stocks. Well, look what's happened now. You can cash out, but at a huge loss. Who could have predicted that something like this would have hit and affected so many thousands of people at the same time? And other investments have been hit too. If you're in real estate, for example, if you rent your property for Airbnb, that income is now gone. If you're doing long-term rental, that too is uncertain because depending on what industry your tenant is in, you don't know if they'll be laid off or suffering lost wages and unable to afford next month's rent. So if you're thinking, oh my God, I shouldn't have done stocks, it's just too risky, just think about that. It's very difficult to avoid the current situation. So many different layers of the economy have been hit. Now, one of the few things that could save you right now is having an emergency savings fund. The experts all recommend having 3 to 6 months of expenses saved up, liquid, meaning in an accessible bank account. And I know it's hard to look at all that money and not be tempted to spend it, or for the serious investors to invest it. You're thinking, man, this money's just sitting there and not earning any real interest. When I know I can make that $500,000 into $1 million easily. Well, it's times like these that remind us why emergency savings are still important. If you had invested that money and you needed to cash it out now because you've just lost your job, you'd be taking a huge loss and you wouldn't have enough to cover the length of time that you had planned. That's really, really unfortunate. Unless, of course, you sold at the right time and put those earnings, those gains into your investment, into your savings account. Now, if you're in a position where you don't absolutely need the money from your investments right now and actually have some cash to spare, there's some good reasons you may want to consider continuing to invest. Remember, I gave you the Warren Buffett quote earlier, be greedy when others are fearful and fearful when others are greedy. Right now, bear market time, a lot of people are very fearful. So now is the time to be greedy because so many people are selling. Many stock prices are dirt cheap. So it's a great opportunity to buy at a discount. But you still have to be cautious. If you want to and have the means to take advantage of this opportunity, here are some things that you can do. Number one, and this is probably the most important one, choose companies that can weather the storm. With all that's going on right now, there's a good chance that some businesses will fail. There will be businesses that are forced to close down for good. Now, bear in mind, most businesses will suffer losses right now, but some can manage a few months of losses and others can't. For some, this will be the end of them permanently. You don't want to be left holding a company's stock if and when it goes bankrupt. When a company goes bankrupt, depending on how the company is structured, shareholders may be entitled to some assets, but are usually way down on the totem pole in the pecking order of who's to be paid first. Shareholders usually get the what left, as we say in Jamaica. And if the company files for bankruptcy and then restructures, usually all the old shares are canceled, rendering your shares worthless. So even though you may be seeing some great deals now, still do your due diligence and choose wisely. Just because something is cheap or on sale doesn't mean it's a good deal. So now that you've done your due diligence and you spotted a couple of solid companies that you're interested in, set a price target. Decide that when the price hits this number, you're going to buy and be ready to pounce. You can set that target electronically. There are apps that let you do it. Personally, I'm not that tech savvy, so I haven't tried the app, so don't ask me which ones, but there are lots of people on Finance Twitter JA who can do that. Ask JC Knight 1 on Twitter, for example. I'm sure he can help you. For those like me who still haven't gotten that far with the technology, you can let your broker know in advance what your price target is. If you have electronic indemnity, you can email them your instructions and tell them, once the stock hits this price, buy. And of course, you can monitor it yourself on the JSC app, which updates daily. Now, the last tip I have for you is to use a drip strategy. The ongoing conundrum for investors is, when is the right time to buy? You want to buy when prices are low, and they're low now, but will they get even lower? If you buy now and it drops even further, then you want to kick yourself. But here's what you could do. Buy some now and buy more little by little as the price falls further. Set multiple targets. So let's say a stock usually trades around $40 and it's come down to 30. Great deal, right? So buy some at 30. Then set a target and say, if it comes down to 25, I'll buy some more. And if it comes down to 20, well, I'll buy even more. So don't spend whatever resources that you have available all at once. Release that cash just drop by drop by drop. Keep it dripping. Devroyd, who you always see on Taking Stock, he has a pretty cool strategy over on his website, CaribbeanValueInvestor.com as well. He calls it the 1/3 strategy. You can head over there to learn more. So we covered a lot today, and there's even more in this week's episode of Taking Stock. The Private Sector Organization of Jamaica and the Bankers Association have recommended a list of measures to their members on how to handle the current crisis with both the public and their employees. We'll discuss. Then later we hear from two businesses that Jamaicans are turning to in droves in these trying times. Chairman of Fontana Pharmacy, Kevin O'Brien Chang, and CEO of Edufocal, Gordon Swaby, join us. And of course, the analysts weigh in on the latest stock market developments. What should you expect from the market over the next couple of months? And well, that's it for this episode of Money Mondays JA, brought to you in partnership with Proven Wealth. I'm Kalilah Reynolds. See you later.